March 5th, 2023. Silicon Valley Bank collapses in 48 hours, $16 billion vanish overnight. Panic spreads across America's tech sector. And you, sitting at home watching the news, you're thinking this is unprecedented. This is unique. This is different. But here's what your brain won't let you see. This exact pattern has destroyed economies 5 times in the past century. The same mechanism, the same psychology, the same invisible force, and the truly terrifying part, it's happening again right now. But your brain is biologically wired to miss it. Evolution designed your mind to survive on the African savanna, not to detect financial disasters. And that design flaw, that cognitive blind spot, that's what this video is about, because once you see this pattern, you can't unsee it. And that knowledge might be the difference between protecting your wealth and losing everything. If you want to understand why your brain keeps missing financial disasters and learn to see the invisible pattern that has destroyed trillions across 5 different eras, hit subscribe and comment which country you're watching from. Because what I'm about to show you isn't taught in any university, it's not in any textbook, and the financial establishment definitely doesn't want you to see it. This is the pattern that repeats, the one they hope you'll never recognize. Let's start with what your brain does automatically, without you even knowing. When you look at financial markets, your mind searches for stories, for narratives, for cause and effect that makes sense. You see Silicon Valley Bank collapse and your brain immediately creates a story: bad management, risky investments, regulatory failure. And those things are true. They're part of the story, but they're not the story. They're symptoms, not the disease. And here's the problem. Your brain is so satisfied with this surface explanation that it stops looking deeper. This is called the narrative fallacy. Humans need stories to make sense of chaos, but those stories often blind us to underlying patterns. Daniel Kahneman won a Nobel Prize partly for exposing this flaw. We see trees but miss the forest, we see events but miss the system. Now here's the pattern your brain can't see. Over the past 100 years, 5 major economic destructions have followed the exact same sequence. 1929, the Great Depression. 1989, Japan's lost decades. 2008, the global financial crisis. 2020, the COVID market crash. And 2023, the banking crisis that's still unfolding. And every single one started the same way, with abundance, with optimism, with a collective belief that this time is different. But it's never different. The pattern is always identical. It just wears different clothes. Here's how it works. Phase 1, easy money. Central banks lower interest rates or print money. Capital floods the system. Everyone feels rich. 1920s. Post-World War I monetary expansion. 1980s. Japan's bubble economy fueled by Bank of Japan. 2000s. Greenspan's low rates after dot-com crash. 2020, unlimited COVID stimulus. 2021, near zero rates for over a decade. Every time, the pattern starts with central banks creating too much money, but your brain doesn't connect these dots because they happen years apart. You forget the beginning by the time the end arrives. Phase 2, euphoria and false confidence, with money everywhere. Asset prices rise, stocks boom. Real estate soars, everyone becomes a genius investor. 1920s. Everyone was buying stocks on margin, convinced the boom would last forever. John Jacob Raskob famously said everyone could be rich through stock investments. 1980s Japan, real estate in Tokyo became more valuable than all of California. People believed Japan would dominate the world economy. 2000s, housing prices only go up. Everyone became a real estate flipper. Nothing could go wrong. 2021, meme stocks, cryptomania, NFTs selling for millions. Retail investors thought they'd discovered infinite money. And here's what your brain does during this phase. It mistakes correlation for causation. Prices are rising. You're making money, therefore you must be smart. But you're not smart, you're just riding a wave created by central bank policy. Everyone's a genius in a bull market. Phase 3, leverage and fragility. This is where the invisible trap closes. People don't just invest their own money anymore. They borrow to invest more. Margin debt, corporate leverage, derivatives. 1929, margin debt hit record levels. People borrowed 90% to buy stocks. Japan. 1989, corporations borrowed against inflated real estate to invest in more real estate. 2008, synthetic CDOs, subprime mortgages packaged and resold, leverage on top of leverage. 2023, venture capital funds, crypto platforms, regional banks, all operating with extreme leverage, betting everything would keep rising. And your brain doesn't see the danger because leverage feels like intelligence, it feels like optimization. It feels like everyone's doing it, so it must be safe, but leverage is gasoline, and in phase 4, someone always lights a match. Phase 4. The crack appears. Something breaks. It's never the same thing. It's always different on the surface. 1929. Agriculture prices collapsed first, Japan. The Nikkei peaked on December 29, 1989. 2008. Subprime mortgages started defaulting in 2007. 2023. Silicon Valley Bank couldn't sell bonds without massive losses. The trigger is always different, and this is why your brain never sees it coming. You're looking for the last crisis, not the next one, generals. Always fight the last war. Investors always prepare for the last crash, but the pattern doesn't repeat exactly. It rhymes, as Mark Twain supposedly said, and that rhyming, that similarity hiding in different costumes, that's what your pattern recognition fails to detect. Phase 5, the cascade. Once something breaks, the leverage unwinds, and this is where trillions disappear. 1929. Stocks lost 89% over 3 years. Japan's Nikkei fell from 38,000 to 7,000. Didn't recover for 30 years. 2008. Global economy lost 60 trillion in wealth. Governments had to print trillions to prevent total collapse. 2020, fastest market crash in history. 35% drop in 1 month, and 2023 still unfolding. Credit Suisse gone. First Republic gone, Signature Bank gone, and here's the psychology your brain does during the crash. It freezes, it panics. It goes into survival mode. All rational thinking disappears. You either sell everything at the bottom or you hold and watch your wealth vanish. Because your brain isn't designed for this. Evolution prepared you for immediate physical threats, not for abstract financial disasters unfolding over months and years. Now here's what makes this pattern invisible to your brain time. These cycles take 7 to 15 years to complete. Longer than your immediate memory, your brain is wired for short-term pattern recognition. Predator behind that bush, food in that tree, danger in that cave, but financial patterns spanning decades, your brain has no evolutionary mechanism to detect those. You literally cannot see them without consciously training yourself to look. And even then, even when economists and historians point out the pattern, your brain resists, because acknowledging the pattern means acknowledging that you're not in control, that you're part of a system much larger than yourself, that the money in your bank account, your retirement fund, your house value, all of it depends on forces you cannot see and cannot control. And that truth is so uncomfortable that your brain would rather believe comforting lies. So where are we now in the pattern? Look around. We've had 15 years of easy money, we've had euphoria and false confidence, we've had extreme leverage across every market, we've seen cracks appear in banking and commercial real estate and over-leveraged. Tech companies, the only question is whether Phase 5, the cascade, has truly begun, or if central banks can print enough money to delay it one more time. But here's what the pattern teaches: the longer you delay the crash, the bigger it becomes. Japan tried to prevent their crash. It lasted 30 years. The Fed tried to prevent crashes in 2001 and 2008. Each one got bigger. And now, after 15 years of the most aggressive monetary expansion in human history, the question isn't if, it's when and how big. But here's the empowering part. Once you see this pattern, you can position yourself differently. You stop fighting the system and start working with it. You recognize Phase 1 and prepare for Phase 5. You don't need to predict the exact trigger, you just need to see the structure, the invisible architecture that your brain normally misses, and that's the real lesson. Your brain will always miss this pattern unless you consciously override it, unless you step back and see the system. See the cycle, see the forest instead of the trees. Subscribe now if you want to learn how to see these patterns before they destroy your wealth, and share this with someone who's still convinced that this time is different. Because understanding this pattern, seeing what your brain is biologically designed to miss, that might be the most valuable financial education you ever get. The pattern is here, the pattern is real, and the pattern is happening again right now. The only question is whether you'll see it before it's too late.